Alright, what's going on, guys? Still not entirely feeling the best, but we're gonna absolutely get through it. So we're gonna smash it. We're gonna just pretty much start straight away. So starting out on the monthly time frame, you can see we've still got what four? Let me see. I think we've just got one more week before. We've got 3 days and 9 hours before the monthly closes. What's prominent on the monthly time frame? These two fair value gaps. Why are these prominent? This is a discount monthly, monthly unfilled. The UF always just represents unfilled. And we have this monthly premium array. So, monthly time frame premium rate, my expectation or anticipation is that we close through this. Heavy down close, preferably. I do also see potential for us to do something like this, like trade into it next week, since we only have a week left, chop around in the top half, manipulate higher, and then say in the next month come down into discount, which would also align with seasonal tendencies. But all right, that's all the monthly analysis we're going to do. I'm pretty much going to drop down to the 4 hour and then call it a day there, okay? So again, my narrative for last week has pretty much been playing out. I know if you're watching this, you've probably been watching along with those ones. If you haven't, I would highly recommend that you go check that out. It's ridiculous how well I'm predicting the market. But yeah, so we've had these consolidation weeks and now we've started our expansion run. All right, now all of this is making sense again if you've been watching, but just go standard deviations from this accumulation, manipulation, distribution leg 2 to 2.5. In my opinion, that's pretty realistic. If we do just scale down and get a more precise looking one, now back out onto the weekly. Okay, this looks a little bit more reasonable now. So at one standard deviation was when we were relatively choppy. Again, the standard deviation projections off of this leg are much cleaner, but we'll get to it when we get to it. So just as of right now, prior week closes as a bearish expansion week. Again, I did say that I wanted to see a heavy down close on that, and that's when we will expand. And the same goes for this sus wick, or just a wick. This sus wick that I've been looking at pretty much. For those of you that didn't know what those lines were, from when I was looking at price and saying I won't tell you what these lines are, here's all it was, is probability quadrants of that wick, and that was just giving very, very precise sorts of levels in relation to how the prior weeks have been moving. But that's all for that. I won't explain that one. It's just a difficult concept. But yeah, so full down close candle, full expansion week. We have had like 7 weeks worth of consolidation. So it makes sense to now have either a continuing week or, because of this large range, this down close almost signifies the heaviness to me that we should continue pretty rapidly lower. This low is a 3 drive pattern. So was previously some form of high resistance liquidity. However, it's premium liquidity. This would be my next draw. This would be where I'm looking to target. I'm not going to be trading next week just because like I said, I've got some mental things I'm trying to improve on per se. And I also am not necessarily here or going to be around my laptop or desk that often. I plan on just taking a nice break. But yeah, these are the two pretty much levels that I'm looking at for price. I want to see this be our premium liquidity. Again, we have extreme discount liquidity. Extreme discount liquidity. Yeah. So looking at these two levels primarily for price to drive towards over the course of next week. All right, so that's pretty much it for the weekly. Again, don't be silly, just mark out your previous. I don't normally mark out the like really simple stuff in here. It's kind of just like straight to the point, high time frame analysis. But yeah, so that's previous week low, previous week high. I'm not going to mark it out. Might actually delete it because it's cluttering the chart, which I don't like to do. But yeah, so what I've been telling you guys about every week has been where price is opening. We are opening low, which you can see here. Open low, manipulate higher throughout the week, distribute lower. Same thing here. Open low, manipulate higher, distribute lower throughout the week. Let me just get rid of that one. Same thing here. Gap lower, manipulate higher, distribute lower throughout the rest of the week. This is following a very common pattern. Now, why is this pattern common? Well, if retail, which is anyone besides an institution or smart money, which is pretty much everyone who's going to be watching this, the narrative says lower, yes. What do we get on Monday or Tuesday? Some form of manipulation, either through a Trump tweet, through news, through something that occurs during the economy that draws us higher. Now, why is it drawing us higher? Because if we gap lower, smart money are exiting at that gap lower. They're exiting their short positions, they're closing. What's that doing? They have to buy those positions back. Who is buying it back from them? Retail, because the market has gapped lower. Now price drives higher, which is then an entry for smart money to get in. And then what do? Drive the price lower while retail think price is going to continue. It's very simple math psychology. It's not always just about candlesticks and chart patterns. All right. So my anticipation is that we do the same thing. We gap lower, we come back up, retrace into this fair value gap. Now, I will say 3 weeks of the same thing, people are going to start to catch on. I think there's potential we gap lower and do continue running lower. Like, this inefficiency is a premium inefficiency. This range, in my opinion, would be relatively balanced in price. Why? Damage in the top half. I know there's damage over there in the top half. And so on, damage in the bottom half here already done. I would almost want to see this week flush straight through. Are we going to get that? I'm not exactly certain. Another narrative is gap high, retrace, something like that, distribute lower. The other narrative is prior expansion week, we could start doing something like this, damage in the bottom half because we're in premium still. We manipulate higher or just even into the top half and then distribute lower. All right, let's see if the 4 hourly is in alignment with either of those narratives. Yeah, so we still haven't even had an up close on the 4 hourly candle or on the 4 hourly time frame, which means we haven't even had a swing confirmed. So that means that this new swing that we're creating is still yet to be put in. Pretty much it means we're still delivering. So I'll expect a gap lower. Once we have an up close candle on the 4 hourly or the 1 hour, that will confirm our swing. And we could then look for some form of retracement. Yeah, to be honest, that's probably enough. It's all in alignment. Everything throughout the last couple of weeks has made a lot of sense. And if you've been watching and following along, again, I would highly recommend you go back and do so. You'd have a complete understanding of market narrative right now, and you'd be able to get on side very easily. You guys wonder or are confused how I have such a high win rate. It's very easy. It's actually very easy. You just look at the charts, understand what the higher time frame draws on liquidity are, which again, after sequences like these, which repeat every year and show you what price wants to do and how it wants to do it, all you have to do is wait for a lower time frame to confirm that, and you can get on side. What does that look like? Let me show you why last week's move made a lot of sense. All right. Market maker models. First of all, relative equal highs. Prominent draw on liquidity. Swing high, swing low. Swing high, swing low. Premium relative equal highs. Original consolidation. Displacement, low risk. First stage reaccumulation. Original consolidation, displacement, low risk, first stage reaccumulation. Second stage, smart money reversal with a 3-drive pattern off the low. Accumulation, manipulation, reaccumulation, which was in its own a little market maker model. Original consolidation, displacement, low risk. First, reaccumulate. Second, smart money reversal off this low. It's very, very simple. But again, it may not be if you're just learning now. So, appreciate you watching along. I'm going to have this out to you by Sunday. Best of luck with your trading weeks. Wish you all the best.